If you're thinking that the only path to retirement is working harder, saving more, and investing in the stock market till you hit 65, I invite you to the 10x Your Financial Freedom through real estate. I'm going to be going over my proven framework that I used to get to financial freedom at 41 in a few short years while working full time and raising young kids. And I know that you can do it even in the current market with interest rates the way they are, and even through a recession, because hundreds of our students, many of whom are busy physicians just like you, have used the same time-tested strategies to acquire over $200 million of real estate. And on day 2 of the event, you get to meet some of them and hear their stories, how they got to 6 figures in passive income while saving hundreds of thousands of dollars in taxes in this market. So if you're tired, burnt out, and ready to take back control of your time and income, if you're struggling with getting your first long-term, short-term rental, or investing in syndications and you don't want to learn from costly mistakes, or you feel like you don't have the time or money to get started, or if you're ready to go from a handful of rentals to 10xing your cash flow, we will be building your personalized recession-resilient real estate portfolio so you can accelerate financial freedom while paying less in taxes. So get ready to go from working harder to working smarter. Register for the event at generationalwealthmd.com/event in lowercase, and I'll see you soon. Hey guys, welcome back to the 3-part podcast series where I'm going to be talking about your wealth playbook for 2026. 2026 is a year which is not going to reward last year's strategy. Interest rates are higher, volatility is here to stay, and if you're a physician who's looking to scale your passive income and get off the hamster wheel of trading time for money, but you feel like you've missed out on the best years and all the uncertainty really makes you want to stay on the sidelines, then this episode is for you, because outsized returns are still there if you know where to look. But what worked a few years ago is not going to work in 2026. So I'm pulling back the curtain on how sophisticated investors are changing their portfolios, and they're tailoring it based on strategies for 2026 and beyond. I'm going to be walking you through. If you listen to part 1 of the episode series, we talked about what shifted and what really worked in 2025. And then in episode 2, we talked about what to expect in 2026, where the real returns are hiding. And we're also going to talk in this episode about how to stay protected and how to stay opportunistic, right? And if you haven't listened to episode 1, please go back and listen to it. It's real stories of doctors who really took action in 2025. Their results, we had physicians who went from 0 to 2 cash flowing short-term rentals, sheltering hundreds of thousands of dollars in taxes in a few months. People who created over 40K of income from their rental portfolio in 2025, and people who invested passively in real estate, they were able to generate 6 figures in passive income, right? Without directly owning the properties, by investing in syndications. So that was a very powerful episode. Episode 2, I talked about how you can build passive income in a volatile market, talking about what's really happening in the market today, and then going into passive income strategies for 2026, and then tax savings as your lever. And we talked about how physicians are still sheltering up to close to $1 million in taxes from just by investing in real estate, and so those strategies still apply. But today, episode 3 is the deep dive, right? This is where we're going to talk about your 5 musts for a 2026 breakthrough. So these are the 5 rules that are going to be your guiding principles. I attend a lot of conferences. I'm actually heading to one right now, and I gather information from industry experts, national experts. And if 2025 taught us anything, it's that even in uncertain markets, those who have clear criteria and rules and a repeatable system, they get rewarded. And in this episode, I want to go over the 5 rules that will form the foundation of your breakthrough in 2026, no matter what happens with the economy, and how you can prioritize downside protection, the things that sophisticated investors are doing differently, and what your biggest lever for momentum is going to be in 2026. So let's get started. Welcome to Generational Wealth MD's podcast on financial freedom through investing in real estate. My name is Param. I'm a mom, radiologist, real estate investor, and mentor to others looking to start or scale their real estate portfolios. The goal of this podcast is to provide you with inspiration, strategies, and insight so that you can stop trading your time for money and live life on your terms. If you love the episode, don't forget to subscribe and leave a review. Okay, so first things first, if you have not registered for our 3-day free event, that is coming up, please go ahead and do so. That is generationalwealthmd.com/event in lowercase. This is where I do a full breakdown of my strategy, how we stress test deals. You'll have physician case studies. These doctors I've been talking about are going to come and share their stories, and you'll have tons of time for live Q&A. And so if this feels exciting, this is intriguing, and you want to learn more and you really want to deep dive into strategies, that's where we're going to be doing that. So that's generationalwealthmd.com/event in lowercase. But that being said, let's get straight to it. You've seen how physicians have been taking action and how they took action in 2025 in an uncertain market. I talked about what's happening in the economy and strategies that work. But today I want to talk about the 5 rules that will form the foundation of your breakthrough that will work no matter what the economy does, and that work especially in a volatile economy, right? And so, if I had to give you 5 simple rules that will form the foundation of how you invest in 2026, the first one is going to be getting clarity on your numbers. And so, there are 2 numbers that you really need to understand. Every event I go to, whenever you zoom out and take a look at the big picture is going to be these 2 numbers, right? The first one is your freedom number. This is your financial freedom number. How many years to financial freedom for you doing what you're doing now? If you know that, that becomes your goalpost, and it becomes your North Star and kind of helps you move towards your goals and set goals. And so that perspective is very important. That knowing that number is what shifted my journey, that allowed me to really accelerate to financial freedom. And so if you haven't, gone through our financial freedom calculator, it's a great retirement calculator. The website is generationalwealthmd.com/FI in lowercase for financial independence. So generationalwealthmd.com/FI financial independence. This calculator I built, it's a custom built calculator, and it helps you figure out where you are, and also allows you to move things around and see how you can really accelerate your path. And so that's the first thing, right? I want you to know if you were to continue doing what you're doing, how many years to financial freedom, and then you know what your goal is, how quickly you want to get there, and you're trying to bridge the gap, right? Now, the second number I really want you to understand is going to be asset allocation. And we're going to deep dive into this during the 3-day event. But I was at, a Tony Robbins Platinum Finance Conference last week. And, a big part of what a sophisticated investor does is planning for worst case scenario, which means you need to plan for an inflationary environment and you need to plan for a deflationary environment. And your asset allocation is going to be key. Most economists believe that in 2026 we're moving into a pro-inflationary environment, right? Most national experts, that's what they had to say. And real assets like real estate, leveraged real estate, do really, really well in an inflationary environment, right? Rents go up, asset values go up. And so my takeaway and my advice for all of you has always been, most of us need 25 to 50% in alternative assets, right? So although most of us are primarily invested in the stock market and bonds, we need to start increasing our exposure to alternative assets like real estate and private equity. And the reason is because it allows you to generate tax-free passive income significantly faster than you can just in the stock market. And it also gives you diversification and gives you resilience in your portfolio, right? Especially in inflationary environments. And so know what your asset allocation should be. And there is no one number for everyone, but a good guideline is to allocate at least 25 to 50% into alternative assets like real estate so that you can have a more resilient portfolio and get tax efficiencies and generate passive income significantly faster, right? And so hopefully I want you to use to figure out your financial freedom number using the calculator I just gave you. That's generationalwealthmd.com/FI in lowercase. And then the 10X event, this is where we're going to deep dive more into all of this. And so make sure you sign up. That's generationalwealthmd.com/event in lowercase. It's free, it's virtual. There's no reason you shouldn't join it if you're starting your portfolio or you're looking to scale your portfolio, right? Now, so step 1 is getting to understand your numbers. Step 2 is disciplined leverage. I can't emphasize this enough. In the interest rate environment that we're in, although there's all this chatter about interest rates dropping, the savvy investor is always going to also plan for interest rates going up, right? Because as inflation ticks up, interest rates could, the Fed may be forced to raise interest rates. So we want to plan for both. And this is where disciplined leverage comes in, right? If you're investing in short-term rentals, long-term rentals, when you're in that conventional mortgage space, less than 4 units, It's very easy to get 30-year fixed, fully amortized debt. That's an amazing thing. If you're investing in multifamily or syndications, you want to be more intentional about this because commercial debt usually lasts anywhere from 3 to 10 years. And so there is a balloon payment on the back end. This is where it's really important to be disciplined. If you are interested in investing passively in syndications, then go to gwcapital.com. If you go to gwcapital.com/guide in lowercase, this is a free guide where I go over these concepts. And you can, if you go to gwcapital.com, you can look at our latest opportunities, how we're looking at debt, and I educate more on that. But disciplined leverage is going to be the second big thing that sophisticated investors are leaning into in 2026. Okay, number 3 is risk mitigation. Again, I have a few different ways where I'm thinking about risk mitigation and how sophisticated investors are thinking about it. But the most important one is going to be diversification, right? And the best way to mitigate risk is through diversifying rather than chasing perfect timing. Now, within our community and within the 10X event, we're going to be talking about this. Within our coaching program that we have, we talk about diversifying, which is why I always coach. Our program always coaches on how to invest in short-term rentals, long-term rentals, and multifamily, right? And that gives you diversification. You want to have diversification across strategies. You want to have diversification across geographic markets, right? Because migration and demographic patterns are different across different markets. Some markets, you always want to invest in a market where there's tons of migration happening, but some markets in this economy are seeing more supply than others, all right? And being very intentional about supply, the supply pipeline look like, it's going to be key, especially when you're investing in multifamily or syndications, which is why in our current opportunity, the Copper Springs in Houston, Preserve Copper Springs in Houston, if you haven't taken a look at it, there's a webinar where I educate on how we're looking at opportunities. So that'll be a very valuable exercise for anyone looking to invest in syndications. You can go to gwcapital.com/Houston and the number 5 in lowercase and take a look at how we're looking at it. There is no supply within a 3-mile radius for the Preserve Copper Springs. That's something we're very intentional about for all the assets we're looking at in 2026. And so geographic diversification really helps, right? In multiple ways. It has to do with migration patterns, but more importantly, supply. And so even if you're investing in the single family space, short-term rentals, please look for geographic diversification. That's going to be key. Now, we have some students who are investing in short-term rentals, and they have students who are in college. They're buying this with their kids. They are, their kids are getting paid through their Roth IRA, and they're investing in college, adjacent to their colleges, right, where their kids are. And so they have exit options where they could exit this property as a midterm rental or a long-term rental, and the numbers still make sense, right? So it's really important when we think about risk mitigation and diversification to sometimes also think about exit options and getting into properties with multiple exit options. When our students invest in geographic markets, we talked about diversification. In short-term rentals, you have long-term markets and you have emerging markets. So if you're investing in short-term rentals and you're investing in some of those traditional vacation markets, it may be a good time to also think about maybe having some exposure to those emerging markets, right? So that's another way to diversification across asset classes. We invest GW Capital for passive investment opportunities. We've invested in multifamily, and we've expanded into manufactured housing and self-storage, right? So diversification across asset classes is another way to risk mitigate, lower risk in your portfolio. And then overall, continuing to look for good deals, but when the numbers make sense and, really holding on to those criteria, but investing across market cycles because, by the time you hear about the real estate market doing well, the boat has often sailed and you've missed opportunity. And so you want to stick to your criteria, but you also want to make sure you have exposure across market cycles and you don't lean into market timing.
If you're interested in learning how to invest in long-term and short-term rentals the right way, so you can accelerate to financial independence with the support of mentorship, community, and vetted investor agents in strong markets across the country, then get on the waitlist for the next cohort of Creating Generational Freedom at www.generationalwealthmd.com. You don't have to learn from decades of costly mistakes by yourself. The program is only open for enrollment in the spring and fall each year. In the last 6 months alone, our members have acquired over $60 million of real estate, and more importantly, they're living life and practicing medicine on their terms. You don't have to do it alone.
Now, that's about diversification. The next thing you can do for risk mitigation is going to be having conservative assumptions and stress testing opportunities. Now, how do you stress test a short-term rental? How do you stress test your, multifamily? This is what we're going to be discussing in the 10X event. So make sure you're signing up for that. That's more than I can talk about in this podcast series. So that's generationalwealthmd.com/event. But it's really important to learn to stress test your deals so you know they will do well. Even if things don't go as planned. You always want to be cash flow positive. If you've heard me speak about this in the last few years, we're only going into opportunities where there is positive cash flow day one. This is one of the best ways you can prioritize downside protection, as opposed to going into speculative deals where you'll say, I'm going to go in, I'm going to do X, Y, Z, and then bump up the rents, and then I'm going to have cash flow. You want to go into opportunities in 2026 that are cash flow positive day one. Now, the final thing as far as risk mitigation is going to be planning for market volatility, right? Eliminate all variables. This goes all the way from debt to labor costs and the cost of construction, right? And so, be very intentional about doing rehabs because of tariffs and labor costs going up. That's a variable that if you can eliminate that and have a business plan that still works, that works, right? Plan for inflation, plan for rents staying plateaued in 2026. They could potentially go up. The expectation is that they will, but the most conservative plans for rent growth still remaining plateaued, right? If your business plan still works, then you've mitigated risk. So that's all I have in terms of risk mitigation. I know this can seem like a lot. For those of you just entering the space, I would say lean into the resources I've suggested. It's a good way to educate yourself as you increase your exposure to alternatives. For those of you thinking about scaling and where you already have a portfolio, these are key shifts we've been making over the last few years, and I think they're really, really important for risk mitigation. Okay, the fourth rule is to lean into creative value add. So your traditional value add, hey, I'm going to do a rehab and bump up rents, is probably a riskier strategy for 2026. This is what we did throughout 2025 with short-term rentals. Our students have been working on direct bookings to increase new bookings. They've been working on increasing revenue through dynamic pricing and really working on listing optimization, right? And so it's really important to be a great operator and really work on the operation side more so than just working on acquiring the right property, right? So this has been 2025 and even 2026 is going to be the year of the operator. It's going to be all about operating your properties efficiently, not just buying a property, right? So that's going to be important. Creative value add is important. And in the multifamily space, we're doing the same thing, right? If you're looking at investing passively through syndications or acquiring your own multifamily opportunities, traditional value add can work in some markets, but your business plan, if you want a solid plan, the sophisticated investors are leaning into expense reduction more so than rent growth or income growth. And they're leaning into creative ways of adding value like property tax exemptions, buying properties at a great discount. This is a great time to go in and get those discounted buys. Copper Springs, the preserved Copper Springs, we're getting it at a $2.5 million discount. The biggest part of the business plan is not rental growth. It is a $400,000 decrease in expenses year one, right? So, and that is based on a business plan that we've executed in the sister property. The entire property management team from there is migrating to this property, and so it's not speculation, but it's leaning into operations, reducing expenses, getting properties at a great discount. In some of our assets, we've done property tax exemptions, but and this is what you want to lean into in 2026. So, if you're curious to see what that opportunity looks like, that's gwcapital.com/Houston and the number 5 in lowercase. If you're listening to this later and you want to look at our current opportunities, just go to gwcapital.com. I usually do a webinar where I walk through what the value add plan is, how we're conservative, how we're stress testing the deal, how we're mitigating risk. So it's always a great learning experience. Okay. And so that's number 4, creative value add. This is also why you want to lean into community and learn these strategies, because this is what And this is what we're going to be sharing at the 3-day event. People who are continuing to grow and scale their portfolios in 2026, how they're looking to add value creatively, and how they're pivoting strategies, right? Now, the fifth and final strategy I want to talk about is going to be tax strategies, right? Tax strategies still work in 2026. We have 100% bonus depreciation. I've talked to you about how physicians are sheltering up to $1 million of income from taxes using these strategies, even in this economy, right? This is something you have absolute control over. So even though the market values fluctuate, as long as you have disciplined leverage, you have good debt, and you're able to hold on to the property, these are the things you can control. Number four, we talked about creative value add. And number five, tax strategies. This is still in your control. Our physicians are doing this with short-term rentals. They're doing it with medical office buildings. They're sheltering their W-2 income from taxes with these things. With our physicians who are investing in syndications, they're sheltering all their passive income from taxes using syndication losses, right? So if you want to learn more, make sure you're joining us at the 3-day event. That's generationalwealthmd.com/event in lowercase. And so to summarize all of this, and this may feel like a lot, which is why I said, join the event. We're going to take it slow. We're going to deep dive further into strategies, and you're going to listen to all these case studies. But 2026 does not require perfect timing. It's a year which requires discipline, right? And this is where the power of community is so real because it shows you what's possible. It helps you identify opportunities where others see uncertainty, and it helps you avoid common pitfalls that all of us are susceptible to unless we have that support system. Right. And so 2026 is going to be again about control over speculation. You have the rules. Now you need a system that works, that's worked in the past, that will work in 2026. And so if you're looking for that exact playbook, join us for our 3-day free virtual event in March. To see what's new in 2026 and where the biggest opportunities are. I'm going to talk about how I got to financial freedom at 41, how our physicians have used the same framework to accelerate their financial freedom, earn six figures in passive income while sheltering millions of dollars in taxes. We're going to share success stories. These doctors are actually going to join us live. You'll have the ability to ask them questions. I'll ask them questions. You can see how they scaled to 150 units in 2025 with the volatility that was there and what their plans are for 2026. I'm going to show you how we stress test every property in our portfolio, short-term rentals, syndication opportunities, the exact metrics that I use. And, alternative assets investing, it's not a get rich quick strategy, right? But if you feel like you can't wait a few decades to get to financial freedom, then you need to be at that event. And so please go on to generationalwealthmd.com/event in lowercase and sign up. But I hope this 3-part series has been super helpful for you. I've had so much fun doing this. I love sharing what can happen even in a volatile environment with alternative assets when you know what you're doing. We talked about what's happening in the market. We talked about our rules and criteria and strategies for investing in 2026. So I'm wishing you all the very best and stay plugged into community. Keep educating yourself. This is a great year to build generational wealth, and I can't wait to see what you do with it.